Today's edition of the London Session Open. Today is March 10, March 10, 2020, and it's 9:42 a.m. in London when I'm doing this market update. My name is Alejandro Zambrano, and we're going to take a look at the markets. We're seeing some interesting moves. We're seeing as well some good steps happening with the coronavirus crisis, with Italy shutting down. That's good, actually. That's what I think, at least. It could be the beginning of the end, at least for Italy, and maybe some other countries as well is going to follow, hopefully Germany and France. But I do think, though, that their pain levels need to go up a bit more. So I think what's going to happen is that for those specific countries, we'll probably see more cases, probably even in the UK, before they sort of pull the handbrake like Italy has. But when they do, that could again be the beginning of the end for Europe, and we could maybe see something as we have seen in China. The big joker here, or not the joker, but the big sort of question mark is what's going to happen in the US, and are they taking the situation serious enough? We'll see about that. And unfortunately, I don't have enough info about that, but I do have sort of a view now of what may happen in Europe, and that of course has a positive effect on the markets. But not everybody's there yet, and there's still a lot of talking about how the situation is bad, and which it is. And we still haven't seen the peak in the numbers in Italy yet. If we look at what happened in China, I think it still added some, I think like 2-3 weeks before things calmed down. The difference, of course, I think in China was that it was much more strict over there. I'm not sure it's going to go as quickly here in Italy, but we'll see. Again, it's a good step for the world and for Italy in particular. So let's talk a bit about the markets then. So we're going to talk about the euro. We're going to talk about stock markets and some other currencies as well. And if you do have any questions, just pop them here in the chat box. We got Nikos here. Good morning to you, sir. Thanks so much for joining us. Anybody that has any questions, put them there. One market per person, please. And I'm not going to be able to answer everything, so if you do have questions, you put them early on in the presentation. Okay, we have Mauricio as well in the chat box. Good morning to you, sir. All right, so let's begin. So this is the euro versus the dollar, and the market maintains a bullish bias, and the market is going down a little bit. Like for today is down with about 100 pip the euro, because you see the market just moved up higher and higher and higher, and I think it does make sense for this to come down a bit. I think we can tighten things up. So this low here, this is the March 5th low. I'll be bullish above that level, and if I take fib from the very low here all the way to the high, these are the different levels. And it would not surprise me at all if we go down to 112.90, 112.42. But from 112.42 or so, I think that will be probably a good little level to work with to turn bullish. For GBP versus the USD, so we said the market, if it takes out this high, can go a bit higher. But I don't really have a strong view here because the market, as you can see, is going up a lot, down a lot, up a lot, and down a lot. And I think I would like to wait. I would like to wait and see what happens. But we got a very strong move here, and then you got a bit of a reduction. And if the numbers turn bad, in particular in the US, maybe this will continue to trade upwards. Maybe, I'm not sure really. I want to wait, I can tell you that. If you want some levels, that's your double top, that's resistance. So there's a bit of a bearish bias below it. And correction wise, if we take fib from the low to the high, we just touched the first fib. Might go down maybe to the 50 fib at 129.58, but there's no strong trend here. And if you look at a bigger picture, it still has a bit of a bearish bias. All right, so this is the dollar yen. So the dollar yen is closing the gap. That's exactly what I think is going to happen with crude oil and many other markets that have gaps. And I think this can be the beginning of the end, again, at least in the short term. But let's not get too excited. I've been excited quite a lot. You can make money on both sides in a bear market. You can be making money by being long, or you can make money by being short, just because the way the market moves aggressively to the upside. And I will admit, I have been bullish on many markets, and I have been making money as well. So it does work. You just need to know a little bit what you're doing, and you need to have quite a lot of luck as well. Anyway, this is the dollar yen. Now the dollar yen is triggered this massive descending triangle. You got 1, 2, 3, 4 lows, and then you have the break here. So the difference between high and low is this level here. But if you look at this candle, guys, well, this is starting to become a false move. Now it's just Tuesday yet, it's just way too early to say if this is going to hold. But if this holds on Friday, we'll probably go all the way back up into the midpoint of the channel. Remember, the dollar yen trading that lately has been very, very difficult. But for now, it's just Tuesday. I still think we have problems ahead of us. I think we can tighten up the trend finding level a bit to 107.07. And from this little spot, I'm going to be bearish. I didn't want to be bearish here, as many people were, because the market had sold off too much. But I'm happy to be bearish here, because here at least we have a decent residual ratio. And if we go down, you know, we're going to make multiples of what we're risking to lose. If we look at the price of gold, gold prices as well are bullish. This is your 4-hour chart. And we have now reached a buy spot, which is 1631.94, which is this level down here. No change by me. I'm going to continue to be bullish above this level. It might take a few days, it might take a few weeks, but as long as it's trade above this low, we're dealing with an uptrend. Here are crude oil prices. And crude oil prices, if you look at it from a big picture perspective, I do know everybody a lot of people probably got margin calls and stuff like that yesterday. And the only time you get margin calls if you have too much risk on. And what do you do then? You don't have too much risk. The number one reason probably why I'm still here is because I always manage my risk well. I learned really, really, really early on that you should never reduce more than 1.5% of your money on any given trade. And then as well, what I do is I trade with money I can afford to lose. I don't trade with huge money. I don't trade with small money. I definitely trade with much more money than the average person. But it's money that if I lose, I'm not going to be happy. But it's not all my savings going into there. I have different saving streams. You got the pensions. You got, you know, the saving money to buy another property. You got your business. I have all these different streams. Plus the trading. That's how I look at it. So if you manage that correctly, you should be perfectly fine. Anyway, I know there's a lot of panic. I know everybody is talking about crude oil. But at the end of the day, the market from its very high, 20 high, is down with 58%. And we're talking about crude oil. It's something people need to heat their homes, to drive their cars, to take airplanes. I know now not a lot of people are taking flights. I think there was some like Virgin, what's it called, Virgin Air, the airline. They were taking off with empty seats from Heathrow just because they want to keep their slots. So they're flying empty planes right now just to keep their slots. So I know now nobody wants to fly right now, but I'll bet you when this calms down, you sure want to have a nice little holiday. That's what I think. At least that's what I'm going to do, because I'm probably not going to go anywhere in the next few months. So I think things will calm down. But anyway, just from a percentage decline, the gap and everything, you do have the 2016 low here, which is being respected so far. So the market is moving up a bit as we talked about yesterday, and I think we can go up, and then maybe we'll close the whole gap, and then we'll see. Because this as well is a descending triangle to some extent. You got all these levels are really important, so we might just go up a bit, and then we're probably going to go down again, and then we'll see if we take out this low. And remember, I was bearish from here at 49.38, so we reached all those profit targets. Selling now at the very low, well, it's probably not the best idea. So looking at this today, the market moved down a little bit yesterday, but it didn't go enough to buy. So I'm gonna lift this up now, and we might be able to reach these levels. And you got the 25.97, which is the 2016 low. And, you know, maybe a stop at 24 or 23.50 or something like that. That could be enough. Then we can go down, and then we can probably go up a bit. I'm personally just targeting something like 36. And to really sell and stuff like that, if we're at these levels, I think again we can go up to 38.53, which would be a little bit more than a 50% correction of the slide from here to here, and then maybe from here. Now, what if I'm wrong? What if it doesn't go up then? So what's the game plan then? Well, if it doesn't go up, what's probably going to happen is that we're probably going to trade sideways between this level and this level. And we'll go down, maybe we'll go up, we go down, and then when we take out these levels, this level here, that's time when it's time to turn bearish again. Until that happens, guys, we're probably going to trade sideways here for longer, so and probably go upwards. And this as well could act to the benefit of bullish traders as well, because when we take out the high, we're going to have much more momentum. So let's see what happens. I mean, crude oil is up with 10% today. Looks like a lot, but it declined a lot over the next few days. Again, I think we can go up a little bit before this whole thing comes down crashing again. We'll see though. We'll see. Let's take a look at German DAX. So this is the German DAX, and so the market was just above. This is daily chart, just above this low here from January 2019. Again, I know some German companies are not doing good. I know the German economy is not going to do very good in the next few months. Maybe go into recession, but not all companies in the DAX 30 are going to go bust. And that is what some people are saying. Long-term conservative money that like to buy stocks and been doing that for generations. They probably bought here, and that is why the market's going up. For us as tactical traders as well, you could have bought here. I think we mentioned this yesterday already. The idea was to buy here, tight stop loss just below. So what you're looking at here is something like that, and then up there, that's a 1.78 times risk-reward ratio. Now there are times when one can deviate from making like smaller bets if you know what you're doing. So that's what I have been doing lately. So for example, if one is really confident, like in the case of crude, I'm really confident, I'm betting more money than I would usually do. So then even if I don't get 2-to-1 risk-reward ratio, if I just get 1-to-1 or slightly less, that's still some decent money. That's how I look at things. And this is the same thing. I do think it's a little bit, I do understand why the markets are selling off. But again, these are some good companies here. They're going to be around. They were around when we were kids. They're going to continue to be around for our children, some of them. So I think still, when I see these declines, there's nothing wrong here buying a bit. So you could ask them, so why did I not buy them? Well, because I'm already long crude oil, and it's the same bet. Being long crude oil, being long these markets is pretty much the same bet nowadays. So I didn't want to double up on my exposure just yet. So what's happening here then? Well, if we do go back down to the lows, again, some people might look to buy a bit here, and the alternatives will go up about a 50% correction. Around that 50% correction, I do think people are going to start to sell, and I think the stop loss orders of these people are going to be just about 12,293. The S&P 500 as well, had a nice little bounce. I'm not sure if I showed you this one yesterday, but this is what we talked about, buying very close to the lows. I don't think I showed you this one, by the way. But the idea would be just very close to the lows, stop just here, and you will be up with a 2 times risk-reward ratio now. So why that level then? Well, if you look at it like this, we're just below this level here. That was an important support level, and then maybe buying here, stops below could have been something. And if I just add something like my like a drawdown. Let's try green today. So these are drawdowns from all-time highs. And yesterday it was down pretty much the same as it was down here percentage-wise. And I said it before, there is like a level here. So if it goes below 20, then you're in a proper bear market. And then at that point, you'll have maybe 2 years before we reach the prior high. But if we just go down with between 10 to 20, the market tends to recuperate within 4 months. You might say, oh, wow, that's silly. Oh, that's not going to happen. But what's interesting here, in the case of the coronavirus, is that what's going to happen here is that as soon as people go back to work, things are probably going to bounce back to normal. I saw some numbers. I think it was Goldman and Morgan Stanley that published them. I think energy production is back at about 79% of the levels before the Chinese New Year. And then there was some other figure which was very similar. Yes, I think also like 60 or 70% of migrant workers within China were also back at work. Migrant workers, what that means in China is that your home city is a different one. The city where you were born is a different one from where you work. And there's a lot of people like that come from smaller cities that then come to the big cities like Shanghai, and they work in Shanghai. And I think 60 to 70% of the workforce was back up. The biggest problem with Italy and Germany and all these countries, and even US, is that some companies might go bust. So if there's a shutdown and the shutdown is prolonged, like, and that's prolonged for many months, well, a lot of people won't be able to pay rents for their shops, or their clients are not going to come back very quickly, and that is the problem with here. But looking beyond that, if it's a short-term situation like China, then things can pick up quite quickly, and from that perspective, maybe we'll be up here in 2 and 4 months. I don't think so, but we could be up there. So, okay, let's talk a bit about the argument here, because I went a little bit off track. The argument to be bullish here yesterday is just that we're down pretty much 20%. And if we go back, it's pretty much in line with all these extreme events. This is 2011. This is 2010. And it's more extreme than any other event. And if we do push into a proper recession, which it looks like we could do in Europe, then we're going to have that more aggressive bets. But it doesn't mean that we can't have aggressive counter moves, and that is really what I like here with this market. So let's look at this today. One could have bought down here. That event is now over. It's too late for that. It's time to start to book profits relatively soon here. As soon as we go up here to 29.66, we would have covered the whole gap we saw yesterday. Most gaps, they get covered. And that is exactly what's happening here. And then you take fib from the very high to the very low, and you can look at these levels, and you can see that you have around the gap closure, and then you got the fourth fib, the 78.6% level. Actually, we can push this down a little bit like that. And from that level, I suspect we can have the other bear leg to come down like that. What's also interesting is that if you look at the current slide, or at the different legs here of this market, you have this leg here, like that. That's a slide of 16%. And then you have this leg here, which is a slide of 13%. Points wise, this is 5,489 points. This is 4,366 points. So it's interesting here that things are getting less and less aggressively bearish. And again, one can make money on both sides. So in my case, I bought here last week in the Dow. I think it was here, actually, here. And then, no, actually it was here. And then the market went up and I booked profits. So you can make a lot of money on these corrective moves. And this is again what we're seeing, a corrective move. Again, I think the situation in Germany and France are probably going to turn more worse. But if they're really clever, they're going to declare that everybody's gonna work from home by the weekend. Hopefully they'll do that, and then we can get things over much more quicker in the whole of Europe. Then the question is what's gonna happen in the US. Maybe they'll do something similar. I'm not really sure. I think the biggest issue they have is they can't even test everybody that they want to test. So I'm not sure what's gonna happen, but again, things are starting to align themselves for a bit of a comeback. But for now, let it go up. Then we'll see what happens here. Most likely people are going to sell. Then we're going to go down. And as soon as we stop creating these higher and higher lows, I'll turn bullish. All right, guys. Let's see if you guys have any questions for me. Just very straightforward. Just put them in the chat box. Okay, so for every person, I'm just going to answer one market question. Okay, so we got a question about the CAD yen and the dollar CAD. So let's take a look at those two. Okay, so let's begin with the dollar CAD. So this is the dollar CAD. So remember last week ahead of the non-farm payrolls, I said, look to buy down here. That one really good. And if you didn't book profits, I'm telling you now, it's probably time to book profits. If you look at this from a bigger picture perspective, I do think we're probably going to go much higher. Like, if we just look at this, is a weird looking inverse head and shoulders with a big head and a big left and a big right shoulder. And we can draw a trend line like that. And I know this is a bottoming out pattern. It's not a pattern, a continuation pattern. But I traded these so many times now that I can tell you they still work, especially in regards to the context. Because look at it from this perspective. Why is this going upwards? It's going upwards because the situation is bad with the oil markets, and they sell oil. So I don't think the price is going to go 60 all the way up to the highs from this year. I don't think they're going to do 100% return. Maybe we'll go up to 40, but there's still going to be a situation where crude oil is going to be weak, and that could keep pressure on the Canadian dollar over the next few months and weeks. So this is an interesting move here. But in the short term, I think everybody can sort of see that this market has probably has a little bit more to go, but it wouldn't be prudent to buy. So what I would do here is that I'm going to just take a fib from the very low to the very high, and then I think this could easily close the gap. So I'm going to look for a move down to 34.82, and then maybe from here potentially turn bullish again. Now there is an alternative one. You can trade that, you know, scalpers and so on, you know what to do. But the alternative one is here. If you look at the 30-minute, it looks like you have a small inverse head and shoulders here as well. It's not exactly the same, but clearly if we take out 137.07, we can go a bit upwards as well. So if you're scalping, you know what you're doing, then this could be something to watch. If you don't know how to manage your short term, then just wait for the big moves and the big declines, as I just talked about. Got a question as well about CAD yen. So this is CAD yen. Let's look at the daily chart. So this is your daily chart in CAD yen, which had a big bearish decline, like a bit like this one. And I think here you can probably continue to, I will probably look to book profits here. What can I say about this one? It's down aggressively a lot. If we take a fib like that, we can probably go up to something like this level here. So about a 50% correction or so before people start to turn really bearish again. So I would be careful with this one. This is to book profits. And you might say, well, if it's down a lot, why don't you buy it? Well, I have a different opinion about currencies. Currencies in general, they can go. I mean, some people are gonna say you can buy dips if you want to, and I'm sure someone out there is doing that, and they're doing that really, really good. But if you look at this market, if you look at this pricing from 1993, you can see that there's no trend in CAD yen. It pretty much just trades sideways, and from here, from 2010 all the way up to 2007, for 7 years the whole thing just went up, and then from here it just went dramatically down on the crisis and then recuperated, but it's still within this sort of range. So that's why here, for example, I wouldn't be buying a dip, because it doesn't have that long-term bias. It's just the relationship to how the Canadian economy is doing versus the Japanese economy, how they're doing. In the case of the S&P 500, you have this long-term bullish bias, and it's been like this for many, many years. Sometimes you'll have sideways patterns for like 10 years or something, but in the longer run, people are still gonna buy high quality companies. And that's why here I'm much more comfortable to buy a dip. Now, I know it's not the same for crude. I mean, if you look at crude oil prices, they're more like a currency almost, right? There is no real strong trend in crude oil. In fact, crude oil is very cheap on a historical basis. I mean, it's the same level as here in the year 2000. But still, crude oil is something that people do like, people do understand, that the people do need it. The relationship between one country and another is something very different that doesn't have to have any impact on. So that's why I'm comfortable buying something like crude on a dip, in a stock market on the dip, but I won't be buying CAD yen. Okay, so we got one more question. Let's answer that one. It's about the Aussie dollar versus the USD. This one is super easy because it's on my ignore box. So this is something I ignore. Let me explain why I would ignore this one. The reason for ignoring this market is because you have this crazy candle here. The market went spiked all the way down and then all the way up. And I have this under observation. So I don't have a strong view here. I just have these different levels. And obviously if you look at it from a bigger picture perspective, this is going down. And if you think about it, crude oil is down, copper prices are also a bit down over the last few days. You know, things are coming back online in China. That could definitely be helpful for the Australia, but you're still sort of at a situation where, you know, things can turn a bit worse. I don't know about the state of the coronavirus in Australia, but I think it's not over there yet. And technically here, this is exactly what the market is telling you, because the market sold off aggressively, and then some people bought a lot because they believe maybe this is the beginning of the end, maybe. And technically here it's a bit of a messy situation, so it's not really clear what the market wants to do here next. So I would ignore this one, but if you really want some levels, then the market is bearish below 66.87 and we might drift a little bit lower, but I would not touch the Aussie dollar at this time because I think it could be more choppy. Okay, we're going to wrap things up. Guys, don't forget to like the video. Very straightforward. You click on that link and then this shows and then you click on like. So it's very, very straightforward. Please help out and please don't forget to share with people that are interested in trading. Of course, don't spam it, but you can share with other people. As well, don't forget to share articles here from investingcube.com. That will help a lot. It will show us as well that we're on the right track. The more people read, the more people are interested in our content, then we know we're doing the right thing. So if you like it, support it. Okay, guys, have a great day, and I'll see you guys tomorrow around the same time here on Investing Cube and the ATFX YouTube channel. Thank you, and bye-bye.